there's lots of good trades, and we look back through them quite a lot. I think for us it's always something smaller, something mid-cap that did well, and I suppose the one I'd use is a company called Griffin in France, and I think it's a good example because it's the one that you least expect, and it's normally the one you least expect that's going to be it. And Griffin was a company we found in 2010. It specialises in testing. We love the testing space. It's got structural growth because of regulation. People would know that by looking at ALS here in Australia, which also does a bit of food testing as well, or Intertek in the UK, or SGS in Switzerland. And we were looking at these companies, and we found Griffin. And it was the smallest of the lot, but it was focused in food testing. And food testing was the area that we thought would structurally grow the fastest. And that proved to be the case. And the beautiful thing about it was we found the company, and it was formed by a guy called Gilles Martin, who was in France, and he was a true entrepreneur. He'd built the company when he was 30 years old. He owned just under 50% of it at the time, and he still hasn't sold a share to this day. And we met him, and he was beautifully aligned with the goal, and structurally the growth was there, and he knew exactly what he was doing. And we found the company at 36 euros, and we held it for three and a half years, and we ended up selling it for 260 euros 3.5 years later, and it was very cheap. It had structural growth, and it had a great controlling shareholder, and they're all the things we're looking for. And ultimately, yeah, we sold it too early. We met him in London. We used to speak to him every year, and even he was saying he thought his share price was too high. So we sold it, and it did. It pulled back to about 200, and now it's kept going all the way to 400. And it'll keep going, but we think it's pretty well discovered now. But great trade because it had a huge total addressable market that's growing, a huge run rate of growth, and a great individual controlling shareholder who just happened to be French. And you can find great entrepreneurs in France, you really can. Yeah, I mean, we look at our trade data, and we obviously have our top 10 winning trades of all time, and I think I mentioned Griffin's before as number 3. We have our top 10 worst trades of all time as well, and our top 10 worst trades of all time, more than half of them are all stocks. And which is frustrating for me because I used to be an oil and gas analyst, and I suppose that tells you something. I think from our point of view, we were very big believers in the shale revolution, 2010 to 2014. And we did very well out of it. We spent time in Houston, a lot of time in Houston, and I suppose you could say in American sense, we drank the Kool-Aid. We believed that the shale revolution, we believed it would grow, and we were right. Shale did grow, and all these companies did very well. What we missed completely was that Saudi Arabia would eventually get sick of the Americans taking share, and in 2014 they decided to call an end to the shale revolution by taking the oil price to $40 or $30, and we all know what happened there. And obviously all of these positions started to reverse quite quickly. Our stop losses got us out of them, but ultimately it was a big hit for us in 2014. What's happened since then is obviously Saudi Arabia has realised that they can't flush these guys out, and all of our analysis was correct. We just missed the one big elephant in the room, that OPEC wouldn't continue to keep the oil price at $100 and just let this happen. What's interesting now is OPEC has now blinked, and they're trying to hold the high price at $50. And so the analysis is correct, and the stocks were all fascinating, but the key commodity that was holding the whole thing up obviously collapsed, and so did the trade. The key lesson was, I mean, obviously we knew this was a risk. I suppose we just didn't do the game theory of someone who had bigger pockets than us. So obviously $100 oil is good for Saudi Arabia, it's good for everybody else. But ultimately the Saudi Arabians are thinking much more strategically and much more longer term, and they weren't thinking short term like the Americans were, and we were probably thinking short term as well, and we probably hadn't gamed out the game theory as to what they would do. Once they started doing it, I'd been around long enough to see them do this before, we headed for the exits pretty quickly. But unfortunately we did give a lot back. Look, I mean, from our point of view, we love finding structural growth. We're a growth fund. We're always looking for areas where the total addressable market is growing. That is the case with food testing, and that is the case with shale oil in the US, and there are winners within those space. We always like to align ourselves with entrepreneurial management or people that are aligned, because that helps us feel comfort that they're working for the same reasons as us. And so they're all the do's. Find the structural growth, find the best player, find the best run player, and just take advantage of the tailwind, as they will and you will with them. The don'ts are just recognise what the risks are. You know, write down what are the 3 things that would make you exit this trade before you go into the trade. And clearly a collapse in the oil prices and Saudi Arabia moving the oil price is a key thing. And so as soon as it happens, then make sure you have the liquidity to get out. And we're very keen to keep the size of the fund not too big, because ultimately growth investing can be fraught with danger. But we are still looking for these emerging winners. And so from that point of view, make sure you know what is the end of the trade, and in this case, the oil price collapsing. And then second, make sure you have the liquidity to get out of the trade, because you will make mistakes, guaranteed. The top 10 and the bottom 10 tell us we are not flawless. And so liquidity is very important to getting out of your mistakes.